Hello traders, Cory Mitchell here with TradeThatSwing.com, and in this video we're going to look at volume and how it can be used for trading stocks. I look at it more as a odds enhancer type indicator as opposed to relying on it as much as price. Basically I use it as supplemental to price movement. So we're going to go over when we want to see increasing volume, when we want to see decreasing volume, and how those can help our trading. There's a lot of misconceptions about volume, such as if the price is rising, volume should be rising. That's simply not the case. If you look at charts, you generally do not see that. And so we're going to go over those common misconceptions when you want to see rising volume, when you want to see declining volume. And an important thing is I view price movement as the direction, trading volume is fuel. And if you think of driving a car, you only need to hit the gas at certain points. There are other times you can simply coast. So you're using fuel to maybe, you're stopped at a red light, you hit the gas to go, and then you can coast for a while if you want. And then if you need to speed up to get around someone, you hit the gas again. So you have these sort of, let's call them inflection points where you use the gas. And sure, if you're driving on the highway, you might use it all the time. But we don't need to. Fuel can be used at certain points, and then we have this ability to coast. And stocks are similar in that volume is only important at certain times. And this is an important distinction to make because there is that misconception out there that if prices are rising, volume should be rising. And we just look at a chart, and that generally is not the case. Really strong rise, volume pretty flat. Really strong rise, volume declining. Nice strong rise, volume declining. Because it got through a certain point, which we're going to talk about. There was enough fuel to get it going, and then after that it can coast, and then you'll see volume typically decline. And then maybe near inflection points, we'll talk about this, or like turning points, you might see volume escalate a little bit, but we'll talk about that a bit later on. But wrap your head around this idea that volume is like gas in a car, and we only need it at certain points. One important distinction is that a single bar of volume, not very important. What we are comparing, its volume is a comparative study. How is volume compared to recent price days? I don't really want to look at it overall. It's more, do we have increases when we want to see increases? Do we have decreases when we ideally want to see decreases? We'll talk about when we want those situations to occur. But you can see here. So we have a little bit of a pullback and flat volume here on the pullback, and then a little bit of escalation. So this is what we want to see, right? Escalation on breakouts, increasing here, it breaks out, it's pretty flat coming in. And so this is basically our gas, right? And then as the price rises, it levels off a little bit. That's totally okay. So the important thing to notice here is that basically when we have a breakout type scenario, you want to see the price rise and you want to see volume rise. That's your gas to get through there. If you have a price rise without the volume increase, that becomes more of a skeptical situation. So in my own trading, what basically happens is if I'm buying a breakout, we don't know what volume is going to look like at the end of the day for a swing trade, for example, or even on a candle, intraday if we're day trading. But what we can do is once the price moves, we have our stop loss, all that, and if it gets hit, whatever. But if the price does break out and we don't get that volume increase that we wanted, that breakout becomes more likely to fail because there wasn't enough fuel to get that going. And so what that means is if I'm buying this breakout, I'm typically going to suck my stop loss in pretty close. Maybe it was down here and it's like, no, if it gets, even drops back below this line, I'm more likely to shut it out. If volume and price action come in together again, they both start rising, hey, great. But so this one, you can see it pops up, volume comes in again, it's holding this area. That's what we want to see. We'll go through more examples like this. And same thing here. So really flat volume on the pullback. We have a volume increase. Don't compare it to the overall. This doesn't look like a huge volume bar, but relative to the prior few days of consolidation, this was a nice pop in volume, probably almost double what the day before was. So let's get into more when we'd want to look for volume increases. Volume increases, just like a car, when you need to get through an area, that's when you're going to hit the gas, right? If you're stopped at a red light or you need to get around someone, it's like to get through something, you're going to hit the gas. So here we can see this, choppy. Notice here, price tries to move above that high, super low volume. So this little breakout here, more prone to failure. No volume increase. Actually lower volume. So price moving up, volume moving down. That's not good at an inflection point. It's okay if you're already rising, but it's not good at, when you're trying to break out of an area. Now that changes over here. See, we're still trying to break above this area, finally do it, and boom, big increase in volume. Even on this candle right here, we can see it. This was maybe a little bit of foreshadowing, but once we get that price move out of there, that's more likely when we're entering the trade. Then we look at the volume when the day's closed. So on a trade like this, if I was jumping in at the day close, I'd be like, okay, volume came in. I feel good about this trade. I'm going to leave my, stop loss where it was, my target. Whereas if this popped up, but the volume was like back to where it was over here, like super low, that shows lack of conviction. I'm more likely to close that trade out if it starts dropping at all, because that trade I already know is more likely to fail. So just, notice that this pop here, no volume, right? We're looking at these candles here, no increase, not good. No follow through, no conviction. Over here, we get the pop through and volume increase. That's good. And then you notice the price continues to rise, but volume tapers off. That's okay now that we've broken through that level. Nice volume increase. This is basically just the same chart, noticing how the volume correlates with the price movements. So ideally, if we're riding this trend or we're looking for potential entries, price is rising. On the pullback, ideally, you want to see that volume a little bit weak or near average. And then as we start to move up, you want to see that volume increase again. It's like you're hitting the gas. You you were like rolling backwards a little bit in neutral, and now you have to go forward. You're gonna have to hit that gas. And so we see that here. So pretty anemic volume on the pullback. That's good for an uptrend. And then you see the volume spike coming in as the price starts rising. Now, again, as we rise, it can be a little quiet. That's okay. On the pullback, we want to see that quieter volume. And when we get the move up, we want to see that increase in volume. So basically, when you're after a pullback or when you're breaking through an area, you want to see that little pop in volume as you come off a bottom. And when you're in the pullback, a little bit quieter volume, pretty good. Here's another one. Now this one's correlated with earnings, but it's still the same concept. Tight contraction, big breakout, high volume shows more likely to follow through. If this came through on low volume, not so good. Now, what about, do we want to see declining volume at certain points? Yes, it can be a great odds enhancer. So we talked a little bit about that. Prices rising, you get the pullback. Seeing some quieter volume on the pullback, I like that. I also like it when you've had an up move, prices contracting, and volume starts to really shrink. This becomes an explosive situation. So here you can see price gets kind of squeezed in here, and volume is also basically getting squeezed. It's like people forgot about the stock, and then it starts going, boom, and you have this huge volume increase, big price move. Same thing here. Gets really, really quiet, and then you have an explosive price move. This is likely to continue. Now we have a couple additional things going on here. So we have the quiet volume here with an explosion out, increase in price, increase in volume. Notice the pullback, much lower volume. So this tells us during this pullback, hey, we're on low volume. This is kind of a weaker pullback. You know, explosive move up, weak pullback based on volume and on price. You know, we've basically, we're just coming back to the breakout point. This often happens, a retest of the breakout area. And so low volume, and then boom, increase in volume as the price starts moving up. This is what we want to see in our trades. So if we're holding trades through pullbacks, or we're entering as, you know, potentially prices turning back to the upside, this is the type of price action we want to see. But then again, as price is rising, again, that common misconception that the price, as price rises, volume has to increase, we do not tend to see that, right? So now this is, it's had its catalyst to start the moving. It's had its burst of price and momentum, price and volume, and now it can kind of coast on momentum for a while, right? It doesn't need another hit of gas. When we're going to get that is usually after the next pullback, and then if it starts rising again on increasing volume, that's what we want to see. When those don't align, so if you get a really big volume pullback, that becomes a more iffy situation for now. At this point here, if we started pulling back from this point, really big volume, or we pull back and the price tries to push up, but it's low volume, that's starting to tell you, ooh, this trend is starting to weaken. We're not getting that gas when we need it. Another example, contraction pattern, low volume consolidation. So this is something that I look for. Is I find it's helpful if there's low volume ahead of a breakout. So this is actually something I'll look for in a pattern. So here we have a bit of a contraction. We have a bigger drop, the next drop a little bit smaller. You can see these lines just converging a little bit. It's not like a super squeezed triangle, but we have some good elements going on here. Notice as the price consolidates up here, huge drop off in volume. So, you know, we had this little rise, and then it's like people just forgot about this stock. And I like that, because that means when it breaks out, all of a sudden everyone remembers, and you get the big volume. So as this breaks out above that consolidation, yeah, we had a little tiny breakout below. That's okay. But we have, you know, a nice volume increase relative to recent on this big green bar when it moves above that consolidation. Overall uptrend, contraction period, plus a little low volume consolidation, and price breaks above it. Again, if we took this trade right above that consolidation, we don't know what volume is going to look like on this bar until the end of the day. That's still okay. We can put out our entry, we can put out our stop loss, and then at the end of the day can assess, okay, was that a nice solid breakout that's likely to continue? And we look down here and say, yeah, volume was pretty high relative to recent. We closed at the high of the day. We broke above that consolidation. I'm willing to just let this play out. If that volume didn't come in and it was really weak, then I'm more likely to, maybe even at the end of the current day or after hours or the next morning, I'm more likely to really suck in my stop loss because I know that trade's more likely to fail. We can look at the same thing again. Volume kind of decreases as the price rises. During pullbacks, we want to see that volume pretty weak, which it is, right? Volume continues to decline. And then as we start to rise up, boom, a little bit of gas, right? Volume increases. And yes, this pattern plays out. And if we're holding trades, we want to see it. And even if we're getting into new trades, we can use that as basically this trade I got into. We might not know what the volume on a daily or the candle we're getting in on is going to look like after it closes, if we're entering in the middle of a candle or the middle of a day. But we can at the end, and that can help us assess how likely is this trade going to likely to do after. There are some indicators you can use. I don't use these a ton. Sometimes they look really good, sometimes they don't. VWAP, volume weighted average price, is basically taking average price and combining it with volume. Used a lot for day trading. Anchored VWAP is you can anchor it to a high or low point, and then basically what happens after that. It can be somewhat useful. These ones look very good. They won't always look that good. ETF volume analysis. I've noticed that especially commodity ETFs often reverse at extremely high volume. So we're talking 10 to 20 times typical volume is when you are getting an extremely euphoric or pessimistic state. And it can sometimes happen at 5. It depends a little bit on how popular the commodity is, I guess you could say. If most people don't follow soybeans or something, so the volume extremes might be a little bit lower just because not as many people are trading it. But something like gold or something like that may get some really extreme volume increases. And so we can see here just massive. So average volume, and it's just, getting hit hard. But then you have this massive escalation, and that pretty much marked the bottom. This is definitely increasing volume here as we accelerate to the upside, and then it peaks out at an absolute extreme, 30 times the prior average volume. Just something to notice. Not every bottom and top is marked by extremes. This one, not so much, right? Maybe 2 times average volume, which would basically be obscured by anything else. So, yeah, it's a tool that we can use sometimes, not all the time. Just something to note. Big volume spike, but decline just starting. That's why I say, it's not, don't always take it as, this is an absolute bottom and I'm going to trust it no matter what. We still are using it in conjunction with price action. If you see a big volume increase and you think, okay, like that's the bottom, well, if the price takes it out, that's not a bottom anymore. I find ETFs, because they're a basket of stocks, it's not the individual stock, we tend to get a lot more like flatter type volume as opposed to stocks which follow a little bit more of the cycle I was talking about. So I'm throwing in ETFs, a little bit on ETFs, but it's not quite the same as trading stocks. If you're going to trade ETFs, you would want to look at volume patterns and if they're even relevant in the ETFs you're trading. I do not find them as important as in stocks, because SPY will often just have, kind of similar volume most days, and yeah, there may be some little odds enhancers, but kind of around holidays you might have lower volume. During normal days, pretty steady volume, whereas in the stocks you'll see these more fluctuating patterns. We'd like to see the decreasing volume, pullbacks, increasing volume, but ETFs are used for a lot of different things, hedges as well as speculation, portfolios, so they're a little bit different animal. So do not prescribe the exact same volume rules to ETFs as you would to stocks. I think that covers the major things. So, this applies to stocks. I threw in a little bit about the extremes of volume for ETFs, but with the stocks, we basically want to see this type of pattern where we have the increasing volume when we're breaking through an area. It's okay if it slows down after that. We like seeing this, lower volume on pullbacks and then increasing volume as it starts escalating to the upside. Breakouts on low volume generally more prone to failure than a breakout on increasing volume. And those alone can help us odds enhance our trades, or maybe look at certain situations where we'd prefer to be in as opposed to be out, or if we're not seeing what we like, get out as opposed to be staying in. So I hope that helps you out. I will link the article that this video is based on below the video, so you can check it out as well. Some more examples on here. Happy trading.